Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as the US dollar index, which measures the greenback strength against a basket of 6 major currencies, continues to weaken and posts a fresh 2-year low of 92.11, the Australian dollar has taken its stride further to the upside and now posts a threat towards the level of this 72.60-65 after inking a fresh yearly high of 72.64. As long as we don't see a New York close above 72.60-65, then I am content to say that the market should turn away. Now, what's also holding this view is that the MACD is still negative and therefore could see the market turn sharply away from this top side of the range. We have seen it before and no doubt we could see it again, and therefore look back towards 72.05 and then down towards its key level seen at 71.40. As I mentioned, the dollar index plummeting. The euro rallies now into the supply zone. Not quite broken above that level of 119.55, but a New York close would give further threat to see a rise up to 120.25. So do be on your guard and continue to monitor your stop loss and also your take profits according to your risk management in case the US dollar does break down further. But from a technical point, like the Aussie, the MACD is still not in favour of seeing the move up or even sustaining. So let's see what happens into tonight. Now at 4 a.m. Sydney time is that we do have the US Federal Reserve minutes to be released. That is, as I said, 4 a.m. and let's see if the market may respond in case there's any surprises in those minutes. The view to the downside is at 105.30.35 for dollar yen. We got there. 105.27 has been the low so far. This was hit this morning. Now, from a technical point, we're not fully broken down from the MACD, so there is further risk to the downside and gives a target not at 105.30, but 104.70 and reassess from there. Sterling surges higher and now close back towards the top side of the range last seen back in October 2019, around 133.30. Now, the view from the recent call was that the TriStar Doji was needing confirmation, and that was a break of 130.30, but we didn't get it, and therefore the market's now been negated to this signal due to this strong candle. And I'd rather sit out for the moment and see how the market plays into tonight. That is in the European session where most of the action takes place. If we do see a rejection close towards that level, somewhere around 132.70 to 133.45, then we may see the market return back to that key level, 130.30. The rally and rejection of 138.5 for sterling yen still waits for this market to break down. Now, I believe from a technical point that this level is still vulnerable and therefore could see a break somewhere around that 138.5 to about 138.75 and therefore see a break towards the bottom side of the range that comes in around 137.20.40. Gold has slipped since reaching its objective of $2,000. I do feel from a technical point we could be breaking down further. Now, a break of 1,979 would give the region towards 1,940 to 60 as a target. So if you are trading from the long side, still continue to monitor your stop losses and also your take profits according to your risk management. Wrapping up with oil, well, there's not a lot to say. Market is still bullish though, as it maintains above the midway point on the RSI. The MACD just creeping over that zero does give further indication we could still be looking up towards $43, $44 to $46 a barrel. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to this new day.